Hello everybody, this video is a recording of all of the most notable statements by Jim Cramer on Tesla stock, and he's made many other mistakes in the past with .com stocks or with the housing bubble stocks, and this is just a major mistake to follow his advice in terms of investment advice. He has the incentive as part of the mainstream media on Wall Street to just get the most views possible, but that isn't necessarily the most sound advice to make. So here is all of the times that Jim Cramer has flip-flopped on Tesla.
And the difference between a red-hot IPO and a red-hot stock, so that you can benefit from the initial fire without being scorched by the flames after this baby comes public. See, Tesla's an electric vehicle maker, and I think this space is all sizzle without any stage. Sell. This deal is a great way to make a quick buck or two, which is why I advocate trying to get in it. But long term, Tesla is cell block material, and you're going to hear it some Thursday coming up. That's why I'm doing a very special cell block today. You get shares in the IPO, you want to sell them after the initial pop. Do not hold them for longer than that.
This accounting officer, Dave Morton's only been there 5 weeks.
Yeah, that's a suboptimal situation. Ill-advised stunt by a man who's now turning into, who was the savant. Is he turning David into an idiot savant?
It's strange decisions that he continues to make. Listen, by the way, I would not have tobacco with pot. I think you should just have the marijuana.
Oh, it's so good that
I think it's better for you probably also
a
not
gateway?
to mix in the
So
tobacco.
you're talking about
But you know what? People are not, the idea that smoking that, it's more about the behavior itself and the decision making, I think, that is giving investors pause.
Well, and look, a chief accounting officer who leaves, this is such a red flag. I was interviewing Brent Selleck yesterday. He's really terrific. He was a tight end for the Eagles for 11 years. He's made a lot of money. He's done a lot of things right. Said, listen, if the Model 3 comes out and it's good, the stock's going to go up. These things make it so that that Model 3 narrative is very hard for the bondholders. And remember, it's the bondholders that matter, not the stockholders, and the bonds keep going down. Now, we're going to start with Tesla because I need you to understand what converted me from an agnostic skeptic to an outright bull. About 3 months ago, my eldest daughter got a chance to drive a Model 3 from Oregon to San Francisco. She just sold her beat-up used Ford, she's definitively non-car person. I know she felt trepidation about the battery and the 600-mile trip. But within the first 100 miles, she called me. That in itself is exciting. To tell me how much she loved being behind the wheel of the darn thing. She's never, ever expressed even a whit of interest in any other vehicle. Now she's bragging about driving a Tesla. I told her that I'd driven one years ago and loved it, but never thought that much beyond that. She had 2 words for me. Buy one. She took down all the features she liked, especially the widescreen, but nothing mattered more to her than the flatulence button, which she thought was hysterical. About 2 months later, and I too found myself on the West Coast with my wife and another fabulous husband and wife couple who could not wait to put me in the Goldwing Model X. My wife, Lisa, loves cars. Oh boy, is she ever a car person. She'd be crazy. And she was immediately smitten. Now, I have to admit, I love the whimsical nature, the handling, the Goldwings were cool. The drive was fantastic. What did she love? The flatulence gimmick. Oh, but she also, like mother, like stepdaughter? But she also dug the come hither button that inches the car towards you when some clown parks his car too close to your machine. You need to know that this rally from the bottom was largely fueled by younger investors who can't resist or love it and buy the dip. Oh, yeah, they love to buy when stocks are down, regardless of the news backdrop. And they've got enough clout these days to move even some of the biggest stocks going higher into the market. So what's their stock playbook, these younger people? How can you game the gamers? First, the younger buyers don't care that there's no stimulus. They don't care that we've got so many vaccines coming that scientists say we might have a vaccine glut by the end of January. High-quality problem. Frankly, I'm not sure what the heck they care about, except buying up stocks that they believe will go much higher. Oh, they're unfettered. They're unchained. They're believers. They're optimists. And they don't really care about traditional metrics of valuation. When they have faith in something, they're willing to pay up regardless. If that sounds crazy to you and undisciplined, I get it. But at this point, these younger investors have made so much money that you need to take them seriously, maybe more seriously even than the old-fashioned hedge fund managers and strategists who are always willing to tout their positions and, more important, their hesitations, or tell you to get out now on a day when the market goes down. These new stock pickers have a different approach, and for months that approach has been working. Sure, it flies in the face of the conventional wisdom, but what has the conventional wisdom done for you lately? In the end, we need to be the ones who adjust, not them. Not totally adjust, but we have to understand them. You know why? One word: Tesla. The stock of Tesla is now up 677% for the year. And that move has changed everything about the way people invest. Tesla is now a $616 billion enterprise, making it the sixth largest business in America. Yet it only plans to make up 500,000 cars this year. I could use any number of analogies to explain why Tesla doesn't deserve this lofty valuation. Well, it's not just bigger than Ford or GM. It's bigger than Ford, GM, Toyota, Fiat, Chrysler, Daimler, whatever. But this new generation of stock pickers, they don't think like that. I think when I thought of this initially, I don't think there's a fund manager in this country, that could get away with this kind of thing other than Cathie Wood. And I say that because if it were a brokerage house that came out and said this, David, we would dismiss it so quickly as being hype. But Cathie Wood actually is so good that you start thinking, okay, well, what is Elon Musk going to do? I mean, maybe he's got a lot in mind that she's thought about. I always know that Elon Musk wants to reinvent the entire grid. Right. The entire grid, which, remember, was put together in piecemeal. So I know that there'll be people who say, Jim, you shouldn't have used the term get away with. But I do feel, David, that she has the cachet to say it and not be dismissed. When I heard it this week, and I spent a lot of time trying to figure out how she got to that price target.
Okay, and?
I just think that she's using the notion that Elon Musk is going to be able to make cars everywhere. But it's not just cars. It's obviously bigger than cars.
It's got to be bigger than cars to get anywhere near that. I mean, it's funny, these different percentage chances she puts on things. The bull case, a 25% probability Tesla could be worth $4,000 a share or more in 2025, so 4 years from now.
Well, what would happen if Tony Sacconaghi from Bernstein said this?
We would think that I don't know.
We think he lost his mind.
Yeah, that he ate something with his breakfast.
Right.
Was,
I like.
Kind of feels like Tesla's the lead, only because of the ongoing debate about auto revenues up 75, but ASPs were lower, the sale of the tax credits, and, of course, that Bitcoin sale.
I don't know. You know, I've been a big fan of Musk, and I think he's done a lot of things right. I think he's doing something that I wish he hadn't done, which is to make projections. Basically, he's going to have the biggest car. That would be something versus, and as you know, Carl, because we talk with Phil LeBeau, that would be pretty hard to do, unseating Toyota. Also, it's very easy to see that they almost had no EBITDA this quarter. And that's not talked about enough. We talk about making a lot of cars. But, David, the adjusted EBITDA, less stock and credits, is, it's almost nothing.
Yeah, but that doesn't seem to be something that impacts investors' perception of the stock or the ability of the company one day to create enormous cash flows, I guess, Jim.
Well, like Sam Gerard, I don't care. I expected more. I also, candidly...
You may care. You may not care, but it doesn't really matter if the majority of shareholders are unconcerned.
Well, that's true. A majority of shareholders were unconcerned in WorldCom, David. I mean, it's...
Whoa.
No, I'm just saying that this was not the quarter I expected. And it's not the quarter I would go on SNL after.
And that was because of what, though, specifically? It was simply the lack of ability to generate EBITDA? Or, listen, they were dealing with a difficult supply chain challenges.
Yes,
they know about the chip shortages. They had strongest numbers they've ever seen in a quarter. Quarter.
They have to deliver next year because he set himself up to beat Toyota. That's what I just think that you could set yourself up to beat Toyota. He's got a head as big as his car going on Saturday Night Live. He was, I felt, He was plaintive at the beginning of his call, and I just wish that he would go back to where he was for a while, which was head to the, nose to the grindstone. Why is that so bad?
Well, it's interesting to hear you be somewhat critical.
I have to be somewhat critical. This was not the blowout quarter. This was a very good quarter versus what others do. But, David, do you see the amount of money that a GM and Ford, I know he laughs at these other guys, David. I know he thinks that they're dinosaurs, but dinosaurs can rule the earth if they come back. I have to watch what Ford and GM are doing. I don't think that they're dead anymore.